Plenty of us are familiar with using candlestick charts, but is the Heikin-Ashi chart a more effective way of looking at markets? In this video, I'm going to talk a bit about Heikin-Ashi. This is what the charts look like. In most of the videos we look at candlestick charts. So I thought we'd look at something of a slightly different twist on this. This is the gold chart that we've got. It's a daily chart going back to October 2019. And you can see while the trend is pretty much the same, Heikin-Ashi do look somewhat different to the traditional candlestick chart. So I'll talk a bit more about what makes these up, then we'll come back and look at things in more detail. Hello, I'm David Jones from Capital.com, and I thought we'd do a trading strategy video. It's just something slightly different. I think plenty of us are familiar with the idea of candlestick charts. Whenever we look at the regular markets that we look at during the week, I always look at candlestick charts. But there is a twist on a candlestick chart, or more accurately, a different type of chart, the Heikin-Ashi chart. And I think they aren't used by that many people, but they can offer some advantages over the traditional candlestick chart. So I thought, well, let's do a short video explaining how they work and how they may be able to help your own trading. As usual, if you're watching this video and you haven't subscribed, if you can click on subscribe, support the channel, and we'll continue to push out lots of what is hopefully interesting content like this in the months ahead. So what I'll do in this video, I'll talk a bit about how the chart's constructed, then we'll jump in and out of the platform just to see them in real life on real markets. So let's get started. So Heikin means average, Ashi means pace, and it's a way, I think, of filtering out some of the noise in the market. I think it can be quite difficult to focus on the major trends in markets when there's so much going on and so much volatility during the day. Heikin-Ashi, I think, makes a big step in filtering that out and maybe smoothing out some of the price action. One way it differs from traditional candlesticks, which look at the high, low, open, close of the current time period, the Heikin-Ashi actually uses some data from the previous candlestick. So what's happened in the previous day, the previous hour, whatever time frame you're looking at, has an impact on what the current candlestick looks like. So let's just go through how it's calculated and where this previous candlestick comes in. So when we look at the open price of the Heikin-Ashi candlestick, this is where it looks at the previous candlestick. So the open price of the current Heikin-Ashi is based on an average of the open and close of the previous candlestick. So it's a calculation based on what went on before. The close of the Heikin-Ashi is an average, again, and it's based on the open, high, low close of the current period. So it doesn't just take the closing price. The high for the Heikin-Ashi can be the high traded in the session, but if the open or the close was higher, then that's the level set as the high. And the low of the Heikin-Ashi, again, it can be the low traded, but if the open on the close was the low, then that's the low. So we end up with a much smoother looking candlestick. Let's jump onto the platform and take a look. So here's the regular candlestick chart for the gold price for most of 2020 so far. We have the usual high, low, open, close. That's how it's calculated. We can see the market sold off into March and then has recovered and pushed out since then. But let's just flip this to a Heikin-Ashi chart. So if I go to the toolbar here, you can see Heikin-Ashi just below candles. Let's bring it up. And you can see whilst the trend is the same, I think we do end up with something of a smoother chart when it comes to Heikin-Ashi. So I'd argue it's much easier to see the trends. We have a much more consistent procession of higher candlesticks or lower candlesticks in a correction. At the moment, at the time of recording, we've had pretty much 2.5 weeks or so of blue candlesticks, higher candlesticks, suggesting the trend is higher. While we're recording now, the current candlestick is red. We'll see how that turns out by the end of the day. And let's just put these charts side by side so you can compare what they look like. So you can see here we have the traditional candlestick chart and the Heikin-Ashi chart. And again, I think it does emphasize that the movements are broadly the same, but arguably the Heikin-Ashi makes it a little bit easier to see what's going on. I'll talk a bit more about trading signals, then we'll come back onto the chart. So let's talk about trading signals and how we can use these. I don't think it's massively different to traditional candlesticks, but it can make it easier to spot and stick with major trends. In an uptrend, we'll have a procession of green candlesticks, and there'll be no lower shadow or the wick on the bottom of the candlestick. In a downtrend, we'll have, of course, the procession of red candlesticks on our platform, and there's no upper shadow or upper wick on that candlestick in a downtrend. When it comes to reversals, when markets maybe changing direction and sentiment shifting, you get much more sort of volatility and almost a doji. If you're familiar with traditional candlestick charting, you can sometimes get this doji forming, and we'll take a look at an example of that in a second. But that's where we have a smaller body for the candlestick and the longer shadow. So let's take a look at some of these trends and some potential reversals that have occurred on the Heikin-Ashi chart. So here's a Dow Jones chart, the US stock market index with Heikin-Ashi, and just to talk about some of these principles. So we can see when the market's moving in a downtrend, we have very little, if anything, in the way of wicks, of shadows at the top of the chart. When the market over here, if we look at May, is moving in an uptrend, you can see there's very little, very rare to see a lower shadow on the chart. So it's a way of, I think, identifying trends and perhaps making it a bit easier to follow the trend. And then these dojis that I talked about, and I suppose we could look at the March low down here, where we have a smaller body and much longer shadows than normal on both sides. So it can suggest sentiment is shifting in the market. It's an example that worked well there. Clearly, it's not going to work well all the time. And on the upside, June the 10th, we had a similar sort of setup on the Heikin-Ashi chart, where we had pretty much a month of rising candlesticks. Then we get a red candlestick, and we have that smaller body and the biggest shadows. Nothing works all the time, but to try this out, you can download our app and try the demo, or go to our website and register for a demo account, and you can actually play around with these Heikin-Ashi charts and see how they make work for your own trading. I hope you found it useful, and maybe it could be an alternative way of looking at markets for you rather than traditional candlestick charts. We'll wrap things up there. So from me, David Jones, and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.